Why is it do it at the same time? Sorry about that, everybody. Our net viewer, perhaps there was a momentary glitch in the internet connection. You've got the audio back, great, and you've got the image as well, I hope. Okay, so I'm not sure what point that dropped out, but to summarize, we're looking at wave one, trading wave one under three different conditions of underlying trend: negative, zero, and positive. And I'm saying that no image. There's nothing I can do. No image. Dear. Okay, I'm really sorry about this, everybody. Unless this is something I can do. My accent sounds great. It probably comes out under moments of stress, such as when NetViewer stops working. Okay, I'm really sorry about that, everybody. If you close down your NetViewer session and log in again, it seems to be the only way. It seems to be the only way around it. Okay, wave one, underlying trend that's positive. Right, I'm going to allow people just a minute or two to log in again. So if you don't mind, we'll just logging out and logging in again when we get back up to where we were. It must be an internet thing, or is it a NetViewer thing? Have you logged back in? Okay. Okay, great. All right. I see everybody coming back in. I'm really delighted we have so many people in today's webinar. All good. Okay, great. All right. There's still a few people logging in. There we go. Another 5 or so that still haven't connected, but let me get started, and hopefully they'll catch up. Right. So I was saying that in looking at the trading report, we are looking at wave one trades that were taken under 3 different conditions of underlying trend: negative underlying trend, zero underlying trend, and positive underlying trend. And I was saying that as an idea, you might decide to only trade take wave one trades under positive underlying trend conditions, which means that you could hope to have a win ratio of about 78%, which is pretty good, and a profit factor of 0.09, and you would have made $7,826. Okay, we can do the same thing and have a look at wave two under negative underlying trend conditions. There were 33 trades, 48% of them were profitable, 1.69 profit factor, which is average wins divided by average losses, and a total of $16,000. Now, why are we doing this? I feel it's important to remind myself why I'm doing things often. We're doing this because we want to discover the nature of this market so that we can trade it. And the nature of this market is expressed very clearly in these statistics. And in other words, this market is a fantastic market to trade wave one trades under positive underlying trend conditions. Notice that it's also a really good market to trade wave three trades under positive underlying trend conditions. Now, there are just a few things that I'd quickly like to point out about this. Turn my whiteboard on, there's the pen, okay. Remember that we did this using a full trading matrix. In other words, all 4 trades were taken for every single cycle when possible. What do I mean by when possible? The software can't always take a trade on every single one because sometimes there aren't any VTLs or FLDs present which it uses to determine the entry points. Okay, so that's why there isn't a trade for every single one of the 4 trading opportunities. Sometimes the entry level for the trade was not available, was never manifested because of the shape of the cycle. So, so whenever possible, it's trades. Now, I wonder if I can use a highlighter here instead of a what's that? That's a laser pointer. No, okay, you just use a pen. Now, I have looked at hundreds of thousands of these trading reports, and I can tell you there's some very important things to look out for. And we have built the default full trading matrix on the basis of this. The first thing is that wave 1 is, of course, I'm not going to be able to write bull in there, am I? Is a no, okay, that's a mistake. Wave 1 is a bullish trade. Okay, in other words, you make money by going up. Okay, wave 3 is also a bullish trade, making money by going up. Wave 2, you make money by going down, and wave 4, you make money by going down. Those aren't very helpful arrows, but that's something that you should really emblazon in your minds. Wave 1 and 3 are bulls. Okay. This is also a mistake. I'm trying to write it. Okay, they are bulls. Okay, and therefore waves 2 and wave 4 are bears. Now, a true or a typical trading report will always show the bull waves, waves 1 and 3, doing well under positive and often neutral, zero, underlying trend conditions. And that is exactly the case here. You'll notice here is wave 1, okay, and there's wave 1, and they're both profitable. Here's wave 3, and here's wave 3, and you can see that under positive conditions, wave 3, which is a bullish wave, in other words, trading, betting on the price going up. When there's a positive underlying trend, it is a good idea. And same thing for wave 1. Wave 1 also often works really well with a zero underlying trend. Wave 3 often performs badly with a neutral or zero underlying trend. Okay, that's what I mean by the character of this market. This particular market, the S&P 500, wave 3 trades taken with zero underlying trend conditions are generally really bad trades, and I wouldn't recommend taking them. Okay, the same thing can be said for wave 2 and wave 4. They are bearish. They are bearish waves. Therefore, you would expect them to perform well under negative underlying trend conditions. And there you can see wave 2 did, and wave 4 did. Okay, and of course now I've drawn over it, so I can't see it. I see there's a question waiting. I'll get to it in a moment. Wave 2, you expect to do well under negative, which it did, and wave 4 under negative, which it did. Under neutral, it could do well, it might not do well, and you can see both of those are fairly questionable. Okay, so so that's what I mean by understanding the character of the market that you're trading. All right, I'm getting to the end of this description. When do you generally think is a good analysis or very good analysis? Just by wave shapes, also by a win-loss ratio you have in mind? That's a tricky question, really, because when you're building a trading history, of course, it's performing an analysis for every single bar. So it's not so much about how good the analysis is. The analysis, changes every single bar. So it's not so much about how good the analysis is. It's more about how well suited is this market to trading using this theory. I found some stocks that just don't respond very well. And certainly if the pattern doesn't look like this, if wave 1 isn't producing a good return on a positive underlying trend, then perhaps you should invert the analysis. Perhaps it shouldn't be a normal analysis. That's really getting quite complicated. I think what I need to do today is finish off the basic introduction to the sentient matrix, and I'll come back and talk some more complex ideas like that Probably next week. Okay. On the trade matrix, what is the meaning of below start and above peak and below peak? Right. Okay. Let me turn off my whiteboard. There we go. All right. So if we scroll down in the trading report, you will see that there is detailed info, including sentient wave bear types and sentient wave 3x4 relationships and previous sentient waves. As a matter of interest, I know one user who in the early days identified that wave 1s that were preceded by a bull A pattern, they only trade that wave. That's the only trade they wave. They don't take any of the other ones, and they swear by it. And it does produce a very, very good profit ratio. In fact, I think they combine bull A and bull E. Anyway, I'm diverting. What are bear types, and what are 3x4 relationships, and what's the meaning of 3 below 1 and 4 below 2 and above peak and below peak? Right. Let me use a whiteboard to explain this. And in fact, what I'm going to do is use a blank whiteboard. How do I do that? There we go. Okay. Now.